All right, welcome everybody. My name is Artie, and I'm about to teach you how to get started in cryptocurrencies. Now, this is a topic that is very deep and very detailed, and you can spend hundreds of hours learning everything cryptocurrency. But I'm going to give you a basic rundown so you have an understanding of what real cryptocurrencies are, what wallets are, and how to actually start buying and selling cryptocurrencies. All right, so the first thing I want to distinguish is real cryptocurrencies versus fake cryptocurrencies. Not that you can't make money off of fake cryptocurrencies, but it's not actually Bitcoin or Ethereum or the real cryptocurrency that you're purchasing. Real cryptocurrencies are purchased on an exchange or through a wallet or through applications like Cash App. Cash App is, however, Bitcoin only. Buying cryptocurrencies on any one of these platforms is actually giving you the digital currency in your own wallet, with the caveat that the only one that is very secure, where you actually own and possess and have 100% control of your cryptocurrencies, is on your own private wallet, where you have your own public key and your own private key. I will get into those two later. On an exchange, you only have access to your public key. So essentially, if the exchange gets hacked or Cash App gets hacked, your cryptocurrency is at risk of getting stolen. Whereas on your wallet, you are the one and only person that has access to it. Fake cryptocurrencies can be purchased on applications like PayPal, Revolut, Robinhood, Webull. Any one of those financial apps where you can buy stocks or ETFs, you can also purchase the monetary equivalent of the cryptocurrency that you're purchasing. So if you buy Bitcoin on PayPal, you are not actually getting Bitcoin, you are actually getting the monetary equivalent. So you can't actually send Bitcoin to somebody else, but you can buy it and then sell it at a higher price. So these are still viable options. However, this is more of a convenience thing. And with convenience comes higher fees. Just like if you buy bread at 7-Eleven or your local convenience store, it's going to be more expensive than if you buy it at a grocery store like Walmart. Now, when you actually purchase real cryptocurrencies, you can do that on an exchange, and the exchange gives you an individual wallet. You can also download applications like MetaMask or Trust Wallet and have a private wallet where only you have access. This is the safest place to keep your cryptocurrencies, period. And the best resource to find any cryptocurrencies or the top performing cryptocurrencies or the most popular cryptocurrencies is going to be a website called coinmarketcap.com. If you are brand new into cryptocurrencies, go to CoinMarketCap and look at the top 5 cryptocurrencies and only play with those. Everything else is speculation, and you need way more knowledge. So when you go to coinmarketcap.com, you can see immediately on their homepage a list of the top 100 cryptocurrencies, starting with Bitcoin, then Ethereum, USDT, BNB, and USD coin. USDT is a stable coin. It is pegged to the US dollar, so this price will never change. Do not be the rookie that thinks, oh, I'm going to buy USDT because it's a good price and it's going to go up. This price never ever changes. BNB is Binance's cryptocurrency, and USD coin is also a stable coin pegged to the US dollar. Everything after this point is all speculation and dependent on company technology and the amount of popularity behind the coin. These are constantly changing their ranks depending on who thinks it's popular. These two, however, are the only things that you as a beginner should be focusing on: Bitcoin and Ethereum. Now, if you are wondering which exchange you should use to buy or sell your cryptocurrencies, hover over the top right here where it says exchanges and only go to spot exchanges. The top 2 exchanges that I recommend to anybody is Binance and Coinbase. I am less of a fan of Coinbase because their system crashes all the time, so I personally use Binance. You can sign up for an account for any of these 2 exchanges. The sign-up process is the same as anything else in existence on the internet. They ask you for some general information, then they ask you for pictures of your ID, as well as something to verify your address. It's quite a bit of a lengthy process, but just follow the steps and you should be good to go. Once you do get your account registered, you can click these top menu icons, buying crypto, showing your wallet, actually trade cryptocurrencies on the exchanges, and other helpful resources. By default, to protect prying eyes, everything is going to be non-visible publicly. To show your account balances, just click this little eyeball, but it will show you all of your cryptocurrencies, your balances of these cryptocurrencies, as well as buying, trading options, and these three dots will allow you to withdraw or deposit and show you your actual wallet address. I only keep about 20% of my cryptocurrencies on an exchange for buying and selling quickly. The rest of my cryptocurrencies are stored on my private wallet for long-term holding. I suggest if you are holding and you don't want to buy and sell constantly, you only put your crypto on your private wallet. Cryptocurrencies can be stolen in a blink of an eye if you are new and easily susceptible to scamming. Now, the private wallet that I recommend to everyone is called MetaMask. You can integrate this into your browser if you have Chrome. You can also download the mobile application on your phone. Okay, I'm going to quickly show you how to set this up on your desktop. Click the Download Now button. Install MetaMask for Chrome. Add to Chrome. Add extension. You get a welcome to MetaMask and a fox that moves around. Get started. To set up a new wallet, click Yes, let's get set up. Agree to their terms and conditions. Create a password. Watch this video on how to secure your wallet. Now, this is extremely important. I cannot emphasize this enough. This is the most important aspect of you signing up. Do not brush over this part. Your secret recovery phrase is a list of random words that you must write down on a physical sheet of paper, not on the notes on your phone or emailed to yourself. On a physical sheet of paper, fold that thing up, stick it in a book that you like to remember where it is, and never show it to anyone ever. Your secret recovery phrase makes it easy to back up and restore your account. Warning, never disclose your secret recovery phrase. Anyone with this phrase can take your Ethereum forever. So click here to reveal your secret words. Stick, bike, skill, light, perfect, imitate, fancy, globe, divorce, involve, labor, slush. Now write these words down in this order. It is very important for the next step. Click next, and then it will say, please select each phrase in order that it was before to make sure it's correct. Once you have clicked all of the things and put them in order, click confirm. Congratulations, you passed the test. Tips on storing it safely. Now, on MetaMask, you can buy, send, and swap. So if you have Ethereum, you can swap it to Bitcoin, vice versa. When you click buy, you have multiple options right here. This allows you to buy cryptocurrencies with your credit or debit card, Apple Pay, bank transfers, Google Pay, Samsung Pay, whatever works for you. Once you do that, you will type in the monetary amount, whether it's $100 or $1,000, and there will be a transaction fee associated with this depending on which one you choose. The same installation process works on your mobile device. Type in the Google Play Store or the App Store MetaMask and install the application. Once it is done downloading, click Open, click Get Started. Now you can create another wallet on your mobile device that has a different account, different phrase. It's a completely separate wallet. Or you can share wallets across different devices, like on your desktop and on your phone, by selecting the import using secret recovery phrase. Because we've already done that, I'm going to select the import, agree. Once you have entered in the secret recovery phrase with the spaces in between each word, you will type in a new password or the same password, click import, and both of those wallets will now be exactly the same. You'll have access to it on your mobile device as well as your desktop. Okay, when sending or receiving cryptocurrencies not through MetaMask directly, on your Ethereum account, right here, you will have your Ethereum wallet address. If you copy it and paste it into a notepad, it's literally just a random set of numbers. When you are making any type of purchase or transferring money to an offshore exchange where you want to do day trading, you will send money from this address where you have your cryptocurrencies to another address. For example, if your broker takes Bitcoin or Ethereum deposits, they will generate another address for you. So you will send it from this address to their address. Please, 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 when making this transaction, check every single digit in this address. Make sure it's uppercase, lowercase, make sure zeros are zeros and not O's, because if you send money to the wrong address, it is your fault and your money disappears. I know this was a lot of information, but this is literally 0.01% of the information you can learn about cryptocurrencies. Hopefully this is enough to get you started and you can expand your knowledge by learning on YouTube videos in the future. Again, warning, 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 cryptocurrencies are not for the foolish. You have to be highly intelligent and not gullible. Thank you so much for watching, and we will see you in the next section. All right, welcome everybody. My name is Artie, and I'm about to teach you how to get started in cryptocurrencies. Now, this is a topic that it
What's up, guys? I'm back from a brief video intermission. I wanted to show Artie's video because he went into amazing detail going over crypto exchanges, wallets, and security. But what I'll be doing in this video is an update on some of that information and also go into a little more detail. And so the top 5 crypto landscape has shifted a little bit. As you can see here, XRP has taken over USDC. We could see in Artie's video that was not the case, but this is on August 2nd of 2023 as of now. And XRP has recently had a partial win against their lawsuit against the SEC on July 13th and is currently the only cryptocurrency other than Bitcoin that is not deemed a security, which is pretty big for crypto as a whole because that gives more confidence to other projects that are under scrutiny that they could be in the same boat as XRP, kind of such as Cardano, Solana, Polygon, Polkadot, and things of that nature as well. But ultimately for XRP, with the recent news, it will give bigger corporations confidence to potentially move forward for using them now that the lawsuit has cleared. So you can also see here that Tether is still number 3. Obviously, Bitcoin and Ethereum are 1 and 2. But Binance at number 4 is kind of an asterisk because it right now is going under a lot of regulatory scrutiny from the SEC because Binance US allegedly has been commingling funds, and I've heard they laid off about 1,000 workers. So Binance itself hasn't been doing all that great. It could be FUD, aka fear, uncertainty, and doubt, but brokers and exchanges have been getting, I wouldn't say a bad rap, but they have been getting a lot of backlash from the SEC, and the SEC is trying to push the envelope hard with them and like Coinbase and things of that nature. But anyway, XRP is really strong, Bitcoin, Ethereum. So already it's at the top 5. So that would currently at this time would be Bitcoin, Ethereum, XRP, Cardano. I don't consider Doge. So Solana would be the next one there. So like I had said previously, Tether and USDC are stablecoins. Treat them as a digital form of payment. Don't treat them as growth investments. These things aren't going to go more than $1. They're pegged to the USD. They're just used as a digital form of payment. And so next we had already went over spot exchanges. As you can see here on CoinMarketCap, go to exchanges and spot, just like he did in the video. It's changed a little bit as well. FTX was caught in a very big scandal and are no longer a company anymore. They lost billions of, I think it's about don't quote me on this, but I believe it's $14 billion of losses between retail people in the United States that FTX has lost for them in the scandal. But you're left with Binance, Coinbase, Kraken, KuCoin, and Bybit as the top 5. For me personally, I use Coinbase and KuCoin kind of in an intermingling relationship. I'll explain very shortly. And then Kraken is really good. I've heard no problems with Kraken, but as I said, for the U.S. citizens, Binance US is under a lot of regulatory scrutiny, so be careful. I personally wouldn't recommend Binance US as of now, but things could change. It could just be some FUD, but it's some pretty big allegations that are getting thrown at Binance right now. Also, before the XRP lawsuit had settled on July 13th, Coinbase recently, and I mean like a couple days ago, like late July, had come out and said the SEC told them to delist every single coin off of their exchange except Bitcoin. So it's just been a crazy time. It kind of makes sense, and the timing's pretty well because a lot of the times in August and September in crypto, you could see a big dip right before the halving is about to happen. So I wouldn't be surprised in the next month or two we see a little dip, and then it tries at the late end of the year. But with that being said, yeah, so I personally use Coinbase and I use KuCoin. And so in the US, you technically can't use a lot of things like KuCoin, OKX, and things of that nature, but I use a VPN. I use NordVPN to get outside the country in order to be able to do this. That is, I personally do that. I'm not recommending you to do that, but do your own research, and if that's something that you want to do, then go for it. So, but I'm going to show you all kind of how I go about it. KuCoin doesn't require KYC in order to trade on it. It only requires KYC if you want to buy things with a debit or a credit card. And so what I do is I come on Coinbase. As you can see here, this is my Coinbase. and I buy USDC on Coinbase. The reason for that is, let's say, for example, I want to buy 1,000 USDC, which is about $1,000. So I go to preview the buy. The Coinbase fee is $0 for USDC. If I were to try and buy USDT and I preview the buy, as you can see here, you're already losing almost $15 in fees just by trying to buy this. And so what I do here is, I'll buy USDC. And like I said, this is personally what I do. And so I'm just giving you all an example. There's probably better ways to do this, but this is just what I found. Because also Coinbase is pretty proud of their spreads compared to KuCoin. KuCoin's their spot is literally on the spot price, which is very nice. Very little spreads. And so I'll just buy my USDC coins, and then from there I'll send it over to KuCoin. And as already illustrated in this video, I keep very minimal money in exchanges. I have a Ledger wallet that I'm going to go into soon. I also have MetaMask that I'll also go into soon, very shortly. But I'll send it over. And so like in KuCoin, whenever you sign up, you come here to deposit, and then from here you select USDC, because we're transferring it from Coinbase to here. You're going to choose the ERC20 for USDC specifically, the ERC20 network. And then from there, once you get an address down here, you'll copy and paste that address. And so whenever you send something, you'll copy and paste it into here whenever you send the USDC. And then you're good to go there, and it comes into your funding account, which is here. So in order to trade, you'll come here and go into spot trading. But first off, you have to transfer your USDC from your funding to your trading account. So however much money you want to put in there, you'll do that. And then I'll just close this. So when you go into trade, spot trading, and then it'll open up spot trading here. So now that that's open, you're probably not going to have all these tabs. It's going to be pretty empty. You'll probably just have Bitcoin. But if you left click this and then go to USD, then you'll see all the potential options. As you can see, most of the crypto are traded in USD Tether. And so that's why I added another chart here where it's USD Tether to USDC. And so I simply just, obviously you have to type in your trading password, and you'll basically buy Tether using USDC. So you transfer that over. Except for AVAX. AVAX just so happens to be trading USDC, so I don't have to do that transfer. But majority of things, if there's more things here, but the tabs just kind of go away. But just kind of gave some examples here. So like HBAR is USDT, Bitcoin's USDT. You actually have Ethereum as USDC, Quant, Render, so on and so forth, just to kind of lay out some examples. So all these require Tether, so I have to change from USDC to USD Tether. But AVAX and Ethereum, for example, I could just strictly, once I transfer USDC over and put it into my trading account, I can already buy AVAX and Ethereum here. I don't have to transfer it. So that is the case of being able to transfer things. So like I said, I just come to Coinbase, I buy my USDC here, I transfer it over to KuCoin, and then from here, KuCoin, I do all my trading, and then I withdraw it to my Ledger device. And so already went over MetaMask, which is a free software, which is really nice. As you can see here, I open up, made a little test account. If you want to buy things in here, you need a little bit of Ethereum to pay the Ethereum fees because it's an Ethereum-based system. And so actually I want to get into another example here. From here, let's take an Ethereum coin. Let's say Quant, for example. And so in order, let's say we want to add Quant to our MetaMask wallet here. So what we're going to need to do is we'll come to Total Market Cap or CoinGecko, whichever you prefer, and you'll type in Quant. So as you can see here, we are on the Quant website on CoinMarketCap, and you want to scroll down here on the left side and you'll see contracts. And so obviously it's on the Ethereum contract, so we're good to go here. What's really, really cool is CoinMarketCap has an add to MetaMask feature. And so if we left click that, your MetaMask will pop up. Do you want to add Quant to your wallet? Yeah. So we add Quant. As you can see, token is added. And then from here, now that we come here, we now have Quant in our wallet, which is really cool. So we can left click here, we'll hide this, and we'll do it another way. And so the more manual way is you can come here and copy the clipboard, just in case they don't have this add to MetaMask and they have an Ethereum contract. So you'll come here, you'll copy the clipboard. And so as you can see up here, we're copied. And then we'll come into MetaMask, tokens, custom token. And so what we had just copy and pasted, that is the token address. The token symbol should automatically say quant. You shouldn't have to touch a symbol in decimal. They should automatically converge to whatever contract address you put in, which is quant. And so we add the custom token. As you can see here, you want to add quant, import the token, go back, and we have it in here as well. So that's the manual way of importing tokens on the Ethereum chain. And then the obviously easiest way is if you have the little MetaMask Fox here, you can click that there. So last but not least, what I wanted to go over as well are different cold storage wallets. And so MetaMask is an internet-based cold storage, but you have things like Ledger and Trezor. I personally use Ledger Nano X. And so if you type Ledger Nano in the search bar, it will be the first website, ledger.com. Now, once you get to ledger.com, you'll come here and you can go down. You can look at all the features. You can do the Nano X. Unfortunately, Nano X is out of stock right now, but it's about $149, including the VAT for the Europeans. But it will come back in stock. I have just the normal silver and black Nano X, but huge but. Whenever you search Ledger Nano or Trezor or any of these things, you need to make sure you go to their direct website. Reason for it, you do not trust anything. You do not buy ledgers on Amazon. Reason for that is there are hackers out there. They'll buy a Ledger Nano. They will then imprint a virus or like a copier or just like a way of being able to store the information to sign back in to your specific ledger. And once you start putting your crypto in there, they are able to just completely yeet it out of your ledger and it's game over for you. You basically just bought a virus and anything that you put on it, they could take away. Not always the case, but please guys, I know it's like half price, and if you don't have the money to spend for like a Ledger Nano or Trezor or whatever, then just simply stick to MetaMask. But please do not buy any of these things on Amazon. Make sure you are on their official websites, because it is scammers on Amazon just trying to screw you over. And that is the biggest security thing that it can come from this video, is please just make sure that you're on ledger.com. But other than that, guys, really appreciate y'all, and I will see y'all in the next video. What's up, guys? I'm back from a brief video intermission. I wanted to show Artie's video because he went into amazing detail. So now we're getting to the fun part of developing a crypto portfolio. So I'm going to be going over setting up investment goals, risk tolerances, and general advice of what to look out for, and realistic expectations you need to think over before you start. Unfortunately, this won't cover every single aspect of crypto from an investment standpoint of view, but my goal is to lay down the framework to give you a really good approach to start out with and continue with personal research and development. I stumbled upon a YouTube video where a guy, his name is No BS Crypto, went over these topics specifically and broke it down with an amazing illustration. And he was kind enough to give me permission to use this for this course. And so feel free to pause the video at any time if you want to read it all, but I'll be focusing on the most important areas. So as you can see here, he made a little illustration. We're around here, as you can see, the previous 2021 bull run. And this is what he's expecting to see in 2025. He's basically saying a 3x from the about 3 trillion total market cap and some change. He kind of rounded up to 10 trillion instead of 9, but anywhere between probably 5 to 10 trillion dollar market cap overall at the peak of the next bull run is pretty realistic. And so for the next 3 months, this was made basically at the end of June, so early July, August, and September is pretty important. And I would agree with that too, because realistically in August and September, usually we see a dip in prices. And so we're actually currently seeing this now on August 17th. Bitcoin took a dip into the high 27,000s. So that's something to look out for. So first, your portfolio is built around your risk tolerance, just like day trading. In this case, we're technically swing trading, I guess you can call it, when building a portfolio to hold in the future. It's all based on risk tolerance. How much are you willing to lose? How much do you want to make? And from there, research into figuring out what ROI goals, return of interest, you want to see in 2025, whether it's a 10x, a 50x, but you need to be realistic of what coins you want to invest in. And usually, the higher the return, the higher the risk. And so you have to be realistic with yourself in the sense that, are you willing to potentially lose the money in order to make more, or do you want to play it more safe? And so he goes into the fact that you can look in news, you look them up on their Twitter and Instagram or Discord if they have that, and we need to nail down our DCA strategy, which we'll talk about here, and then the next video I'll be going over more calculations of how you can kind of look at things too. And so just by doing this is not the whole story, and I agree with this as well. It's basically 2/3 of the story after the bull market. Is once you made your money, you need to now diversify yourself into other things of researching stocks, bonds, ETFs, and managed funds. This is just general purpose advice. Look to store your gold in assets. And also maybe real estate. I haven't personally dived into this, but this is an opportunity for a lot of people too. But basically, all he's saying is don't put all your eggs in one basket, especially after if you potentially made money in the future. Hopefully in 2025 you do make some money with crypto if you do decide to do that. But after you've done that and it's come into the next bull run, whether it happens in like 2029 or 31, don't put it all back into crypto. You've made your money. You need to start allocating it elsewhere and diversifying yourself and let your money make money and not just put everything back in and just risk it all again. So that's pretty important to definitely agree with him there. And so this is what you need to start out with in the beginning. It's your prep work. You need to figure this out for yourself. Number one, what is your starting capital? 4,000, 10,000, 15,000, might not even be this high, and that's okay. Maybe it's $100, $400, $1,000, so be it. How much can you dollar cost average per week? $50, $150, $250. Maybe you invest weekly, bi-weekly, monthly, but it needs to be consistent. There's one thing you need to know in crypto is that we'll never, or any markets in general, to be honest with y'all, is you'll never time the bottoms, the perfect bottoms, you'll never time the perfect tops. And DCA and dollar cost average again consistently over a week, bi-weekly, or a month is just less stress inducing instead of just trying to figure out, doing all the calculations, just trying to figure out when the low is and dumping all your money in, and then it goes even lower, and now you're sad because you don't have any money left because you thought that the previous low was the lowest low. But if you're dollar cost averaging in, you don't really care if it's going slightly higher or lower because you're consistently putting money in. But with that being said, if you don't even know, what I would say is you need to do a personal monthly statement of your bills. And if you've never done that before, it's extremely important because you could be running a loss monthly and you have no clue about it. And so I created this example, like a crypto monthly statement breakdown. And this might not be for crypto, but this could just be for general to see like, what are you spending money on? And maybe you can eliminate some of these things and see if you could have that extra money to invest, whether weekly, bi-weekly, monthly, etc. And so I made a quick thing. This is as simple as it gets. There's not many formulas. The only formulas here is summing the money in that you make, which is the money in. And this, so if you're making $30,000 a year and you're paid bi-weekly, so that'd be 24 payments, you make about $1,250 bi-weekly. And so if we multiply that by about 20%, assuming you'd have to pay 20% in taxes, let's just say, then it'd be about $1,000. So that's what I'm going off of. And so I just used July as a random example and let you know you got paid on the 17th. So you got $2,000 money in. Let's say you had to pay for groceries for 2 weeks. Let's say you had to fill up your car. You had to pay for rent. You have insurance. You pay for Netflix. You have Spotify. You have to pay for utilities, electric bill, water, sewage, trash, utilities. And this all is your money out. And that's what I'm summing. It's a negative sum of all of this. And so this is important, even if you don't plan on doing a crypto portfolio, it's super important just to understand like if you're running a deficit or not, because some people might not even realize what they're paying for monthly and realize like, wait, like I'm actually losing money. I shouldn't be getting Starbucks every single day or ordering Uber Eats or DoorDash every week, because that's actually making my monthly come out to be a negative. And so this is an easy way to just look into that. Getting back into the crypto portfolio side of things is the next step of layer one. It's how much can you afford to lose? 0, 40%, 100%. And think about it. And so he breaks it down into low risk, low reward, high reward, potentially. Breaks it down even further, like we've gone over before. Low risk, low reward is assuming that you don't want to lose money. And it's never going to be a 0% chance. Like there's a 0.1% chance Bitcoin could go to zero. It's just, there's always a probability. Nothing is guaranteed. But basically low risk, low reward is this is the safest bet in crypto, Bitcoin and Ethereum. But you can't expect to get huge 100 times gains. Like Bitcoin at its current price right now, you could expect 3 to 5 times the money that you put in by 2025. Nothing is guaranteed. It's just like the cap of what potentially could happen. I could be completely wrong and it just blow off tops and goes crazy. But realistically, what is the top of where it probably could be for Bitcoin and Ethereum? Ethereum's more of a 5x probably, but like I said, nothing is guaranteed. And so moving on to your large caps, like we've gone over before, which is basically the top 50 cryptos from 1 billion to 100 billion market cap. You have your XRP, Cardano's, and Stellars, and these are more likely to hit the 10 to 20 times the money you put in. But like I said, it could. It doesn't mean it would or it will. Moving on from that, you get to more riskier things. Optimism, Mina, Casper. It's your medium cap coins. And I would say currently with 100 million, it's probably the top 200, not top 300. I could be wrong, but like it kind of varies between the two. But these, you could potentially see like a 50 to 100x, but it's more risky. You could also lose your money at the same time that you invested in some of these companies, because not all, like 90% of crypto coins will fail at some point in time. It is what it is. Moving on from there is where you kind of, I don't really like to use the term gambling with like portfolio and trading, but these are more of a gamble. Less than 100 million, you're not really sure. And like that's okay to allocate a very small portion of your portfolio to this if you want to take that chance, and if you research coins in this kind of realm that you'd be like, well, if this narrative could pop off, then like this coin could go crazy, like 500 to 1,000x. But like you have to be prepared to basically lose all the money that you've had. So maybe you allocate 1, 2, maybe even 5% at most to like just the high risk, just to see like what I'm okay with losing that money. Like let's just see what happens there. So you need to be realistic. If you want to make a 10x and you put all your money into Bitcoin, you have $100 and you want to make 1,000 and you put it all into Bitcoin, that's just unrealistic. Like Bitcoin probably won't do that 10x. It could, Very small chance. So you need to be realistic, like in the sense that if you want to make a lot of money, but you also don't want to lose money at the same time, you need to understand like, okay, you can't have both. You can have one or the other. You need to involve risk for potential reward, or if you want to be more safe, then allocate it to Bitcoin and Ethereum. So next thing is narratives. So think of narratives for crypto as like moats for stocks. And if you don't know what a moat is, I'll just obviously be explaining both of them anyway. So the moat in stocks are basically like, what is the driving factor of why you should invest in that potential stock? Like, what makes it different compared to all the other tech companies or utility companies or gaming companies or anything of that nature? Like, what is the like essential thing that separates itself from the rest? And so think of that as narratives as well. So narratives like is basically the sectors of crypto where you have the layer ones, interoperability, like we've gone over, privacy, tokenization, gaming, metaverse, storage, DeFi, decentralized social, NFTs, etc. And so he was kind enough to lay out majority of the popular narratives that crypto will be having and his personal opinions on a scale of 10 on what he thinks will be good in 2025. That doesn't mean it's going to be perfect. It's just what he thinks. And I'm pretty on board with majority of the things that he's saying here too. And so like layer ones, obviously all the blockchains will have a huge role. Interoperability is going to have a huge role because you need to be able to communicate between blockchains efficiently and move between things with an intermediary very efficiently. I think privacy is going to have a huge role. I think we're going to have a lot of things. Privacy is going to be a huge talking point, aka narrative, in this point in 2025. Gaming, he believes, which I think is going to be pretty big, and storage, I believe, is going to be pretty big too. And so he labels this with specific companies, and he also puts little arrows of what they are in this case. Like Hedera, Solana, and Cardano are obviously all layer ones, can do tokenization. They all have the capability of running games and having gaming companies build on top of them. And so it's more general purpose. That's what they call the general purpose blockchains. All the Hedera diehards, if you call Hedera a blockchain, they're going to cry. It's technically a DAG. It's not a blockchain, but it basically acts like one anyway. But anyway, general purpose just means like they're not solely focused on privacy or certain things like that, like Mina Protocol is. Like Mina Protocol is not only a privacy narrative, but it's a layer one. But Hedera, Solana, and Cardano kind of like the jack of all trades, master of none, where they're able to do a lot of things here. And so what's important with this is whenever you're doing your research, you want to be able to pinpoint projects that are prosperous, obviously, but they also tackle multiple narratives. That way you're exposed to multiple things. So in the case of Solana, for example, if you want to get into that, blockchains are going to have a huge role, obviously. Maybe tokenization doesn't do as well as you think, but gaming does really well, and gaming thrives on Solana. So it's like, well, if you would have just gotten a privacy or a tokenization coin and it doesn't do that well, then like you would be struggling. But since you have invested in a potential coin that covers multiple narratives, you could be saved in that regard. So that's basically what he's saying here. And then going over this pretty quickly, market penetration, this is pretty important. You need to understand the effect, the short and long-term effect that certain projects have. And so I'll go a little closer so you can actually see it. And so in the future, what people are saying is there's not enough GPUs to power this new era. And so what Render allows you to do is basically rent out your graphics card to other people to borrow it and use it for themselves, and you get paid. And so like maybe you're going to sleep and you're going to turn off your computer where you be like, you know what? I'm going to let other people use my GPU and I can make money while I sleep with that. And then also Quant, in the same sense, is partnered with a lot of central banks and is trying to work to make CBDCs. While I don't like CBDCs, it's almost guaranteed to happen in some sort of capacity. And so Quant is the interoperable coin that are working with a lot of top countries in order to make this happen. And so this could be a potential coin that could pop off like way down the line. While I think it still will do good in 2025, it's more of a longer term solution rather than a short term solution, which is basically what this is coming down to. And so getting more into the actual portfolio and investing side of things, he goes over Hedera, for example, he goes over that. And so he'll look at the year to date difference. And so in this case, back in November, when Bitcoin was at its low of 16,500, Hedera at this point was about 3.5 cents. Its market cap was about 950 million, and its circulating supply was about 25.1 billion. And so As of now, at this point, which was the end of June, it was at 5.5 cents, and its market cap was about 12.9 billion, and its circulating supply was about 34.8 billion. And so it was 1.5 times up from its low, which isn't that bad to actually start investing in. So that's a start. So the second thing is vesting in emissions. And I will say I struggle trying to find this for a lot of the coins. Vesting in emissions, like the graph itself, is super hard to find, but I'm still going to explain to you what vesting is. So basically, before the coin ever comes out in the market, you obviously have your venture capitalists and you have people that are investing in the coin beforehand. And a lot of times they are giving a vesting schedule. And basically what that means is that all the people that invested beforehand, before it went into the public market to exchange, they're guaranteed that like slowly in time, they will be given their coins out between months. It varies. This isn't Hedera, this is Mina. I couldn't even find Hedera's vesting schedule, neither could he. And so it will tell you like, okay, during the next year, this money will go into the circulating supply and be given to the investors. Because if you had 100% circulating supply and you had given all the coins to the people that bought previously, well, clearly the price is higher and everybody would just sell and price would just tank. You'd be screwed at that point. And so vesting schedule is important because it allows you to see what the potential circulating supply is in the future. Because in the case of Hedera, it's not going to be 34.8 a year from now. It'll probably be like what he guesses here is about 36.3 billion instead of 34.8. And you can kind of get pinball this where it was 25 billion back in November, and then here in June, in July, it's 34.8 billion. So you can kind of gather like, okay, what could it be in the future soon? And so working off of that, figuring out what the potential circulating supply is at the peak, he'll use market dominance as well, which is super important. And so we've gone over that before. The market dominance is the percent of your specific coin that you're looking at, that percentage of the total market cap in itself. And so in his case, like I said before, he thinks there might be an overall $10 trillion market cap at the peak of the next bull run. And so that's what he'll work off of. And so from this point in time, it was 0.25 from, as you can see here, he made assumptions. 0.25% was the peak market dominance of HBAR. And so if he believes that the overall market cap could be $10 trillion, you simply multiply 10 trillion by the 0.25% and you get 25 billion. And that is your market cap, aka your demand. And so from there you divide by your vesting, which how much of circulating supply will you have, and that's your supply. And so demand divided by supply will give you a potential future price that you could look to target in the future. So I'm going to be going over this way more in detail and going over some examples mathematically just to give y'all. But that is basically how you can kind of figure out sell levels. You figure out the potential circulating supply in the future. Also, if it could reach the market dominance that it has, if you think it will equal it, or if you think it could potentially go above it. That's why he has like a minimum of it just equaling the 0.25. But then in this case, like he says, well, what if it becomes 1% of the total market supply instead of 0.25? And so as you can see, that drastically changes the price. So if you think that price could easily go back to its high of 0.69, then you would ladder sell afterwards. And then if you don't think that it could potentially get to that, then you would ladder sell at normal resistances, like we teach obviously in day trading. So buy levels is more of the traditional side of things, where you will look in the past and you'll see this was the 2021 bull run. I'm not sure which coin this is specifically, but you'll see price accumulated at this point and then took off during the bull run, and now price is actually accumulated again. So maybe these are areas that you potentially want to buy in. These are accumulation levels before price could potentially soar back in the direction of where you want it to go. So that's really important. I just kind of wanted to go over. It's extremely important understanding of the money that you're working with. If you're interested in it might not even be crypto, it could be stocks, ETFs, anything of that nature. But it's important to do a monthly statement, figure out if you're actually running a positive or a negative monthly, to then say like, okay, do I want to invest weekly, bi-weekly, monthly? is this 582 consistent or is it not consistent? What is the consistent number? And then from there, you can figure out everything from here. And so it's important. You need to understand your risk tolerance going into this. You need to figure out your sell levels. And then from there, you can see if the buy levels make sense from your goals. And so that way, you have everything written down. You know exactly when you want to sell, and you don't make any mistakes from there. So I'll see you in the next video. So now we're getting to the fun part of developing a crypto portfolio. So I'm going to So we've gone over the building blocks of our portfolio, and that's determining our risk tolerance and plan of action in the sense of deploying capital. Next is determining potential sell levels. And there's technically a step in between, which is obviously researching the potential projects to see if they would be a good fit in the first place for your portfolio. And then once you go through that initial screener, then you'd arrive here at this point of determining levels. Now we need to figure out if this is worth investing in comparative to what our goals want to be. Everybody's profit goals will be different, so in this video I'll simply show you how to determine levels, and from there it is up to you to decide. I will throw a big disclaimer out there, especially during the point in the video where I'm calculating future prices. It's that there are a lot of unknown variables that nobody can predict. So I'll be using as much previous data as I can to generate values. So please note that it isn't guaranteed to happen, but it could happen, and it gives us kind of an idea or a roadmap of what to potentially look out for and what to expect. So what I want to go over now is determining current prices, which we can easily do at this point, and there's no guesswork about it at all. So current price is equal to demand divided by supply. Your demand is your current market capitalization, and your supply is the current circulating supply. I took a screenshot of Ethereum on CoinMarketCap just to give an example. As you can see, the market cap highlighted here is about $196.7 billion. The circulating supply is about 120.1 million ETH. So the current price at this point is simply dividing the market cap divided by circulating supply, and that gives you your 1,637.67 price of Ethereum at that current time. Now, before I move on from this and go to determining future prices, what I do want to say is that price is irrelevant in determining if you think that the coin can go up 10, 20, 50, 100 times its value. Price is literally just the result of the market cap and the circulating supply. If a project has a low circulating supply, there is a high probability that the price of each coin is going to be a lot higher than a project that has a huge circulating supply. Like in the point of Bitcoin only having 19.4 million of it, and obviously the demand for Bitcoin is $500 billion, but it's just the simple fact that if you have a lower circulating supply, that probably means that the price is going to be a lot higher. So just for reference. So determining future prices, this is where we get into the wizardry. And so future price is equal to future demand divided by future supply. So the future demand, we've gone over this before in the previous video, is market dominance, and you multiply that by expected total market cap. So we're going to go with the previous video and just round this off and just say that we can expect the market cap during the peak of the next bull run. Let's just say it's going to hit 10 trillion. So that's going to be our number for this calculation. And so the market dominance, like we've gone over before, is that specific coin's market cap divided by the total crypto market cap at that time, and you multiply that by 100 and you get a percentage. That is your market dominance. So for future supply is the current circulating supply plus the expected vesting emissions at the peak. And so that's I should have probably highlighted that red too. The things I highlighted in red are basically, we are guessing at this point off of previous data and what we can assume could happen in the future, basically. And so determining when Solana is going to peak in our example coming up here is extremely hard. But I wanted to give an example, that way you can go about determining the future prices. So to start off with, market dominance, to get that percentage, like I said before, is the specific coin's market cap divided by the total crypto market cap at that time, multiplied by 100, and this helps determine the min and the max price values that we could expect to see next bull run. So future supply, if possible, find a supply chart and do a little math to estimate future supply. And in that case, we're going to be using Messari, which is very convenient. I believe they have most of the crypto coins, if not all of them. So we're going to be using that. So like I said before, we're going to be using Solana, for example, to try and determine the min and the max of what I expect Solana to hit in the next bull run. So as you can see here, you could pause it and look at all the numbers of how to calculate everything. But basically what we're going to do now is go through it manually. And so I'm going to start with the market dominance. So to determine the market dominance, we're going to find out where the coin peaked at. And if you're lucky and TradingView has it, what you'll do is type dominance and you'll hit the crypto tab, and you'll probably see a lot of the big and major coins are already up here. It's very convenient because what this does is it gives you the market dominance percentage already, and you have to do no calculations. In our case, since we're using Solana, we're going to be using the SOL.D chart, which is the Solana dominance. And what we found was that the beginning week of November 7th of 2021, that's whenever we saw our peak in price. And the reason why we're doing the beginning of the week is to check the past snapshot on CoinMarketCap. And so what CoinMarketCap allows you to do, if you hover over cryptocurrencies, it allows you to see historical snapshots. And what that does, you can go back in time and you could see what the market cap was on November 7th of 2021 to determine and calculate what that market dominance percentage is. So in our case of Solana, it is at $75.5 billion of market cap. So now what we're going to do is we need to know the total market cap at that specific time. So I highlighted here on November 7th of 2021, it was at 2.773 trillion. And you all should know from previous videos, if you type in total and select crypto, the total chart is the crypto total market cap. And we now know that it was at 2.773 trillion. We can now determine the market dominance percentage. And so in our case, it was 75.5 billion. And I'm just going to change this trillion into billion just so I don't have to write all the zeros. We know that 1,000 billion is in 1 trillion. So in this case, 2.773 trillion is simply 2,773 billion. And we get our market dominance percentage on that specific day. And as you could see, to double check, we have the same exact number, 2.72% on November 7th. So I wanted to go over this just so if you have a coin that doesn't have a dominance chart, this is how you find the market dominance. But in the case of Solana, it has a dominance chart, so we're good to go. We don't even have to calculate that. Why do we need market dominance? Well, like we said before, future demand. So market dominance times the expected total market cap will give us our future demand. So in this case, we have our market dominance of 2%, and we have to write it in decimal form because it's a percentage, and we multiply that by the 10 trillion. And 10 trillion is a lot of zeros. There's 12 of them. And that's how we get the $272 billion potential minimum market cap of this number here in the example. So moving over to future potential supply, it gets a little dicier. So we discovered it's almost about the total max supply that Solana has. So in this case, we looked and we saw that Solana, along with Bitcoin, peaked on November 7th of 2021. So we're going to assume that in the next bull run, sometime in 2025, as you can see down here, that Solana is going to peak with Bitcoin again. It might not, but that's all the data that we have to go off of is that it did previously. And so with that being said, that's going to be a stipulation that we say Solana is going to peak whenever Bitcoin peaks sometime in 2025. So we go into the Bitcoin chart and we look, we obviously know that May 11th of 2020 was the last halving all the way to the top of the Bitcoin peak of the double top was 546 days. I went on the day counter, calculator.net/day counter, and I'm just going to assume, it's another assumption that we have to make. Let's just say that April 24th of 2024, the halving is going to occur. I did the calculations before, and I can't really remember the day. I think it was in the 20s somewhere, but it could be anywhere between early April all the way to late May. I feel like is anywhere between the halving. It's kind of undetermined. But let's just say it was April 24th. And adding 546 days would be October 22nd of 2025. So this is a random assumption. It's very theoretical. Who knows if this is going to happen? But on October 22nd of 2025, we're going to assume Bitcoin peaks. And we're going to also assume Solana also peaks with Bitcoin since we made that assumption. And so that's where we got this number of October 22nd of 2025. So it's going to make more sense why we had to figure this out soon. So like I said before, I went on Messari, and I'm going to do it from the start. That way we're all on the same page. So Messari.io/assets gives us an opportunity to look at the supply chart, which is very nice. So we'll click Solana and we'll view the asset page. And so the reason we have to worry about this is now that I'm going to go back and I'm going to select Solana on CoinMarketCap, is that every single coin has a total supply and it has a circulating supply. And like I've gone over in vesting emissions, is that the vesting emissions is a schedule that slowly prints out the supply until it's at its max total supply. Some don't have a max total supply, like Ethereum. They have a burn mechanism to where they literally destroy coins off in existence to help to help mitigate the inflation. But majority of coins will have a total supply and they'll have a circulating supply. And as you can see, it's around 73-ish%. And so from here, people don't realize that this number is going to change by the time October 22nd, 2025 happens. And so I'm going to show you soon on the Solana chart after we calculate this, is the simple fact that if you just assume that this number stays the same, your price predictions are going to be crazy wrong, because it's, like I said before, price is demand divided by supply. And obviously demand's going to go up, aka the market cap. And if you assume supply is going to stay the same, it's going to be completely drastic to where what it actually could be. And so as you see here, so remember this 555.1 million SOL out there as a total supply, right? So now we go to the supply chart of Solana, and we see that from the percentage change from 1 year ago is about 16.77%. As you can see down here, it was around 348.8 million SOL out there. And as of basically today, it's at 407.3 million. So what I calculated was the simple fact of using this day counter and using today's date, October 17th, it's about 26 months away from October 22nd of 2025. And so from there, knowing that the year-to-date percentage change of the circulating supply is about 16.77, what we can deduce from that is that we multiply that by 2 to add in 24 months. So let's just make this 16.8. So multiplying that by 2, we get about 33, right? And then adding 2 more months to it, we get about 35.8. And so that's the estimated percentage change of the circulating supply 26 months from now. So the current circulating supply, as we see here, 407.3 million, and then we multiply that by the 35.8%, and we get about 553.1. And as we know, Solana has a 555 total supply. So we're almost at 100% total supply at this point. So from there, what we now know the potential market cap, aka the demand, and we now know the potential future supply at that point, aka the future supply. So theoretical future price, what we would do is we would divide the demand by the supply. And doing that, we come to a price around 491.86 per SOL. And that's the minimum, assuming that Solana will get back to its market dominance. Not only you need to determine the market dominance, but you need to think, okay, well, what was Solana doing here November 7th, 2021, and what is it doing now? I can give you a spoiler. Solana is more innovative than it was in 2021. It has more partners. It has the most active coders and developers out of any crypto project in the space, in the total space itself. And so it's a fair assumption to make that Solana will come back to at least 2.72%. Not guaranteed at all. I'm not guaranteeing this. Obviously, anything could happen. But for me, a minimum assumption is that it will return back to its dominance, if not go above it. And so that's why I was assuming at the point of October 22nd, 2025, it will at least be at this 2.72 number. Maybe it could even be as high as 5%, which is even more bullish. And so that is how to determine the market dominance too, which is another asterisk. You know, like there's so many asterisks here. But this is a way of trying to determine potentially what the future price can hold. That way you can be more prepared than you were the previous day. So taking into account today's price, as we now have determined our max and our potential min sell levels, we could see that if we were to start investing at $22, or it's at $21.91, basically calculating our new circulating supply plus the previous 2.72% market dominance, assuming it'll get to that point, we are looking at a price of $491.86, like we determined here, and that is about 21.5 times reward. And so you'll see the percentage here. Basically divide the percentage by 100, and that is times your profit. And so if you put in $100, you would have made $2,100 here. And that's the minimum that I went through in this example. Let's just say Solana has been innovating way more and is like beating everybody, all of the blockchains except Ethereum, the dust, and it claims 5% market dominance in this next bull run, which it could potentially do. With that being said, 5% of that 10 million expected total market cap is 500 billion potential market cap instead of the 272 previously. So 500 billion divided by 553 million gives you that 904 number that you see here, which would put you at about a 40x. So if you put in $100, you potentially could make 4,000, and that's assuming you hold all the way until it would hit this point. And like I said before, you never know with crypto. It's not a guarantee that these numbers are going to get hit. These are just theoretical, just going off of the previous data with a lot of assumptions. But what I do want to go over, and then I'm going to go over one last thing to talk about sell levels, is not messing with the circulated supply. So as you see here, our circulated supply was at 407.3 million currently right now. If you would just assume that price is going to 3x, just like the total crypto market cap will, then you would be looking somewhere in the thousands, which who knows? Solana could hit 1,000. Is it guaranteed? No. Is it probable? It's a low probability, but it could. I mean, who knows what could happen? They could be widely adopted. But as you see, the minimum and the maximum of what I calculated is way under that. And this is calculating the circulating supply that will be increasing along with the demand. But this number is just saying the demand's going to increase, circulating supply staying the same, which clearly it isn't, because as you can see, it's in a 16.77% change increase yearly. Just want to make that apparent. And this is completely determined on Messari's charts of supply. There's other cryptos like Bitcoin, for example, and Quant is another example, and others who basically already have all their circulating supply equaling their total supply. So it's strictly just demand at this point, and price is just going to soar up from there. But you need to make sure that you look at the supply and see how heavy it's going up and determine that with your demand. That way you can accurately potentially predict minimum and maximum targets for specific coins that you're interested in. So if you're interested in a potential 20 times reward from Solana, then this might tick all your boxes, and you might look to potentially start dollar cost averaging in here and doing that for any other crypto as well. But last thing I want to go over is dollar cost averaging ladder selling out. So if you believe that this 20 times is, I wouldn't say 100% guarantee, but a high probability that this will be hit, then maybe you want to start ladder selling right after or right before it. That way you can start taking profits. On the flip side of things, you know the 20 is more probable than the 40. What you could do is you could determine potential areas where you could set alerts at from 20 all the way up until 40. Maybe at 10 times, because 10 times is halfway there. 10 times reward is basically at its all-time high. So if you believe that it's going to reach that previous all-time high, maybe you sell off the coins that you bought initially. And so in the case of you're literally playing with house money at that point, you've literally safeguarded yourself to where you've taken off your investment, and from there it's just straight profits. That is another strategy that you can deploy as well. But at the end of the day, it is up to you and what you decide to do. So what I wanted to give you is I wanted to arm you with potential ways of calculating prices instead of just looking at the chart and throwing a fib extension and just be like, YOLO, it's going to hit 1,000 or it's going to hit 500, because there's a high probability that these bank numbers, these 0 numbers, are going to have huge rejections on them just because it's a psychological or bank number. So a strategy could be you ladder sell like $5 or $7 less. So like in this case, if you're looking to sell at 600, maybe sell at 593. Or if you're looking to sell at 493, maybe sell at like 484. Or like ladder sell in awkward random numbers, because people are always looking for that $1, that $2, $100, that 100,000 to sell at, and it doesn't always get there. So come up with an idea, write it down, set your alerts, and then from there, set and forget. Wait until the bull run happens, and hopefully you'll be making some money. I'll see you in the next video. Before I start, I forgot to mention this in the previous videos, but as a recommendation, I wouldn't invest in any more than 10 cryptocurrencies. Anything more, and that requires a lot of maintenance, and it's best to do more research and just have strong conviction in the 5 to 10 coins than spreading yourself thin across like 50 coins. It's a crazy time during the bull run, and juggling coins, trying to sell them while exchanges are having supply shortages and having to go back and forth between different exchanges to sell certain things can be a nightmare if you hold too much variety. So please do with that information as you will. To recap so far, we've defined our risk tolerance and plan of action with our capital. We've researched and found projects suited for our goals and determined their sell levels, which ticked off all of our boxes to add into our portfolio. And now we're slowly dollar cost averaging into our plays. I want to show you some tips and tricks to help you keep track of your portfolio in real time, how to set convenient alerts, the option of fetching price data to Google Sheets if you want to really nerd out, and also ultimately giving a quick reference article for tax purposes, because a lot of people will be wondering about that. And it's fair. Also, before I get to the taxes part of the video, I'm going to have a little bit of fun and create an imaginary $1,000 portfolio where I'll spin a wheel to determine 10 random coins that I'll keep track of on CoinGecko, and we'll see how it performs in due time. So with that being said, let's start this. So you are now dollar cost averaging into your plays, and personally, my advice is the first time you buy and any time after that, I recommend either going to CoinMarketCap or coming to CoinGecko. They're basically the same thing, and starting a portfolio. That way you could track your performance in real time. I personally do Google Sheets. You know me at this point. I'm just a Google Sheet fiend. CoinGecko and CoinMarketCap make this so easy, and it's free. And so that way, like, you're able to track everything, and I'll show you how to do it here. So whenever you click portfolio, you're gonna have to make an account. You could sign in with a Gmail, it's fine. And so click all portfolios. You won't have a portfolio, but in this case, we have one starred, which is Bitcoin. So whenever you click portfolios and you click all portfolios, you'll come to this screen, and let's just use the My Portfolio, the main one. And so we have coin starred, which is nice. So if you come to CoinGecko, what you could do is you could star all these coins. So let's say we star Ethereum as well, and you could add it to My Portfolio. So now when you go to your portfolio, you have both Ethereum and Bitcoin, which is very nice. So for the sake of things, let's just unstar. Do you want to remove it? Sure, for the time being. Let's unstar it and just focus on Bitcoin. Let's say you just bought a little bit of Bitcoin, and so you obviously have a zero balance right now. What you're going to want to do is you'll come to the side, you'll click this Add Transaction button, and let's say the quantity that you bought, it'll say it in your exchange. It'll give you the quantity of however much you bought. Let's just say I bought 0.01 Bitcoin, which is about $266 right now. You could change the date too. So by all means, even if you forget to do this, you can go back in time and be like, okay, I bought this then, I bought this then. That's what's good about this too. Now let's just say at this point in time, I literally bought 0.01 Bitcoin, which is $266. Now you can add fees and you can add notes, but like the fees are so minimal, I don't really care to do that. Once you click submit, you now have a trade logged in here. And so like your total balance is 266, 24-hour portfolio change, total profit loss, so on and so forth. You'll even have a pie chart, but we only have Bitcoin, so it's like you just have 100% of Bitcoin. So from there, you'll add all your coins that you have, and then you add the transactions. And so once you have multiple transactions, or if you want to ever view transactions and you go to your portfolio, you click this little right side, view transactions, and then from there, it'll show a list of how many times you bought and of what amount and what quantity and when was the date. Obviously in UTC, but who cares at this point? So this is how you are able to literally track your portfolio in real time, which is extremely convenient. And this is completely free too. So next, what I want to share is how to set up convenient alerts. So you could do this through TradingView. By all means, like go into TradingView, maybe you have some general markups for crypto, and maybe you just have a bunch of alerts you set for XRP, maybe random values here that you set. I have TradingView Premium, so I have unlimited alerts, but it's very annoying to see so many alerts on my alert manager in TradingView, so I actually take advantage of this on CoinGecko. What you want to do is you want to come to the Products tab all the way to the right, and then click CoinGecko app. Whenever you do, you'll be prompted to this page, and it will literally step-by-step how to set up price alert functions on CoinGecko. Now, there's literally an app on your phone that you download, and you can set that up. So you choose your coin, you can click the bell, set your price target, go to price alert, and then from there, you'll get alerts. But what's really nice, which I like, is there's a CoinGecko app. And so you could literally link your account to where you get notifications from your phone when specific alerts happen. As you can see here, you slide to the left, and you could do price alerts here, which is super, super cool. And so you literally can get a text message from your phone whenever certain alerts are happening from CoinGecko. So really convenient, especially if you don't have TradingView Premium and you don't have the option of unlimited alerts. And so like this is a really good way. Maybe you're ladder selling, and so in the future you just set up all your alerts now or within now to the halving whenever you start investing. And then from there, you just simply wait until you get an alert from your phone, and then you know you should take advantage and then go sell your coins to make money. If you want to nerd out, CoinGecko actually has an API with Google, and you can actually import CoinGecko's data into Google Sheets if you want like real-time price values here. And it literally goes step by step into this as well. Look that up if you like nerding out and you want to make basically your Google Sheets form of CoinGecko CoinMarketCap. So with that being said, what I want to do now is have a little fun. And so like I said, I'm going to make an imaginary portfolio. I'm going to use this as the reference page. I'm going to take this off. And what I'm going to do is I'm going to spin the wheel 10 times. We're going to fast forward this, and so you're not going to have to wait this long, but I'm going to have to wait through the spinning. Whatever number it lands on, I'm going to choose that coin, and I'm going to, quote-unquote, imaginarily invest in it and track it in our free CoinGecko portfolio. I'm going to just invest $100 into 10 coins, so $1,000 in total of Monopoly money, I guess you could say. Maybe I'll put some money into it. Who knows? But let's see how it goes. And then we'll be able to track this. Maybe in 2025 it goes crazy, so we'll see. So let's get started. 12 is Polkadot. So we're going to come here. We're going to go to My Portfolio. Well, actually, we're going to favor this. We're just going to start these for now. 37. Chronos. 38, which is Aptos. Number 1, which is none other than Bitcoin. So we have that already favored. 31. which is Hedera. $49, which is XTC. 5, XRP. 8th is number 26. Actually, we're going to have to re-roll that because that is a stable coin. 16. Ton coin. Number 9. Solana. Number 25, which is Stellar. Okay, so go to my portfolio. So now we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Honestly, with luck, this is a pretty good portfolio. I'm not gonna lie. I haven't looked that much into Aptos and Chronos, but I'm very familiar with Hedera, Stellar, Polkadot, Solana, XRP, obviously Bitcoin. XTC is doing pretty well, so this could be interesting. So without further ado, I'm going to go into each one, and I'm going to be looking to buy $100 worth, or at least try to. I was checking Timecoin because I've legit never heard about this coin, to be honest with y'all, but I'm going to trust in the wheel. Okay, so without further ado, they're all about 100. I just didn't feel like doing the exact math to get them all correct, but they're all around $100. Sue me, it's $7 above. So, as you see here, XTC, Hedera, Aptos, Bitcoin, Chronos, Toncoin, Stellar, Polkadot, XRP, and Solana. So, we'll see. I mean, I'm just going to keep this saved. I'm going to try to remember the login. I'm pretty sure I'll remember the login. And so who knows, maybe we come back here October 22nd of 2025. That's the quote-unquote expected date that I came around last video on maybe Bitcoin getting at its peak there. And we'll see where all of these coins are at and see if we would have actually made some money. Everything is 10% holding, all put in around $100, 1,000 total, and we'll go from there. So last thing I wanted to go over was about taxes. So there are multiple things you could do for taxes. I don't necessarily recommend one specific thing to do, and I'm not saying this is the best option because this is the free option CoinLedger is. If you have a tax professional that is fluent in crypto, amazing. I would definitely utilize them. But CoinLedger is free, and basically you create an account and you link whatever brokers that you use, auto import, and it will do all the data for you to help make your tax reports so much easier. But what I wanted to do is show you this website off of CoinLedger, so coinledger.io/guide/crypto-tax. And this was an article updated about a month ago, which is really nice, so it's still pretty up to date. Basically, they tell you how to pay taxes. And also, this is a really big thing that I wanted to cover, and it starts it at the beginning. It's buying crypto is kind of like buying stocks in the sense that if you hold for less than 12 months, you can incur around a 10 to 37% tax. But if you hold for at least a year, you could pay anywhere upwards from 0 to 20% depending on how much you make and whether you file single, married, joint, or separate, or you're the head of the household. So some cool stuff there. It even goes into more detail, gives you a step-by-step from CoinLedger themselves. So, I mean, it's official. It's like they're telling you how to do it. And then from there, they also give you some tips on how to lower your crypto taxes. I think that the donating cryptocurrency option is kind of cool. And so, like, IRA is also an option too. But from there, That's at least tax purposes. I can't go into too much detail because I don't really know where everybody lives, and also it's different all over the place. Whether even in different states in the U.S. compared to the countries, but for tax purposes, I definitely recommend looking at this article and seeing. It does have a little U.S. stamp on it, so maybe this isn't as good for the international folk, but definitely look at CoinLedger and maybe any international tax documents that you could find. But I at least wanted to give something, that way I can put you all on like a little path in order to figure out what you need to do with that. So with that being said, now we've learned how to start building our portfolio, what to look for, set your goals, be able to track your performance in real time, be able to download the CoinGecko app to set alerts very conveniently that will ping to your phone. And from there, all we have to do is sit and wait. Just sit and have patience. You did the research, you did the work, and now you just need to have the patience in order to wait for everything to occur. I will say there will always be FUD in the markets, aka fear, uncertainty, and doubt. As long as you did your research and you have the conviction for your projects, I wouldn't worry about any other outside source. There's going to be so many people on YouTube and all over the place on Twitter hyping it up, fearing it down. And the important thing is, if fear is being implemented into the markets and prices are going down, especially at a time like this before the halving, that's really good times to get in. Fear in the markets are good buying opportunities. You need to reverse the mentality. And in the sense that if you go to your barber, you're getting a haircut, or your grandma's asking what that Bitcoin is, whenever there's a lot of euphoria and a lot of hype and a lot of praise and people are jumping in, they never heard of this before, and they're asking, like, should they buy Bitcoin to the moon, Bitcoin 200,000, 1 billion? That's probably when you need to look at potentially like, okay, where is price compared to my alerts right now? It's getting pretty mainstream. This might be a good opportunity to start cashing some profits. So obviously not financial advice, but that's just from personal experience where I've seen. And it's just like an easy indication of potentially when to buy and sell. So with that being said, we will be wrapping up this course very shortly, but I hope that you got a lot of information out of this, and I'll see y'all in the next one. At this point in time, we've researched projects and made our list of no more than 10 cryptocurrencies to invest in. We determined the potential sell levels are adequate in regards to the goals we set, and we are dollar cost averaging into said projects and are now holding/waiting for the fireworks to start. Technically, there is one last thing we could do to make a little more interest in our investments. Instead of letting some of them sit idle, aka our cryptocurrency sitting idle, we can make them go to work for us to earn some rewards, and that is called staking. So what is staking? Staking is a way to earn rewards for participating in the security and maintenance of a blockchain network. You can lock your coins away for an agreed time, and they're used to help verify transactions on the network, and you're rewarded with more cryptocurrency. So now in this video, we'll be talking strictly about proof of stake. It is less hands-on option compared to proof of work and also less expensive. For proof of work, you need to buy equipment which can run on the expensive side to start mining, and you have to install a specific voltage plug for that equipment and run the profitability costs with the enhanced usage of electricity, because you're going to be running through some electricity trying to mine some Bitcoin, for example. But for proof of stake, you don't have to worry about any of that. All you need are the coins you were investing in anyway, and you can secure them on the blockchain and let your money make money, at that point accruing the interest of rewards. So, for proof of stake, validators are randomly selected to verify transactions and earn rewards. The more cryptocurrency you stake, the more likely you are to be selected as a validator. So bringing this back a while, we learned about blockchains, and so in this case, I'm just going to kind of reiterate, blockchains is a diverse and geographical distributed network of computers or servers called nodes. That was kind of a complicated sentence, so let me break it down for you in an analogy. Let's assume that each individual node is a house, and so a collection of houses can be a neighborhood. So think of a neighborhood as a server, which is just a collection of nodes. From there, a collection of neighborhoods can become a city. A collection of cities can become a state or a country. A collection of countries can become a continent. And from there, that is how the blockchain is interwebbed and formed. It's just connections of nodes, validating, verifying, and attaching things to each other. And so in this case, validators specifically are special nodes responsible for validating new blocks and attaching them to the blockchain. So in our cases, we are giving our coins to the validators, which are verifying transactions, and whenever those specific validators that we've invested in are used in the blockchain, we are rewarded for that, and we get our interest, aka the rewards, for investing in that validator, aka staking. So before I get into the different types of staking, I wanted to show this website. I literally just found this website a couple days back, and I thought it would be a pretty good way just to kind of give you all an idea of where to go and what to look for whenever we're trying to stake our cryptocurrency. You cannot stake all cryptocurrencies. It's only for specific projects. And what's cool about this is stakingrewards.com/staking, and you come to the staking tab, you could see there's about 4 pages worth of coins that you can look to stake. So not only could you be looking to research projects that could be doing really well in the next bull run, if they also tick this box, if you want to be able to earn interest while you hold the crypto themselves, like maybe you're investing in Ethereum or Solana or Cardano, maybe even Polkadot or Avalanche. Not only are you invested in them and you're waiting to get that gain, get that 5, 10, maybe 20x of the capital that you put in, but from there, while you wait, you can let your money make you money, which is really, really cool. And so the rewards are here. I would take this with a grain of salt because it might be a little different on a centralized exchange or a decentralized exchange or wherever you go about this, but it kind of gives you a generalized roundabout number of what the staking rewards could be for these specific projects. And so going to the different types of staking. So how can you stake and where can you stake? Well, first off, you can stake your cryptocurrency directly on the blockchain network. For example, I'll show a website in the next slide. Actually, I'll show a Hedera wallet that I have, and also I'll show the website for Avalanche. But there are multiple blockchain networks that have specific websites that you could just literally go from. You link your cold storage, whether it's a Trezor or a Ledger or a Tangent wallet or your MetaMask if you have one, but you link your wallet to that network, and then you're able to do whatever you want, whether staking or things of that nature. So number 2, you could stake through a staking pool. So a DApp, aka decentralized application in a blockchain. I'm going to show you that too. I'm going to show you Saucer Swap on the Hedera Hashgraph network, for example. And then number 3, you could stake through your cold storage wallet, which is really cool. So Ledger has the capability. I gave a couple examples. There's probably a few more, but it's not every single project. Obviously, you could stake from Ledger, but Ethereum, Solana, Polkadot, Cosmos, Near, Tezos, and a couple more, you're actually able to stake from your Ledger. So not only are you secure by holding your coins on your cold storage, you can also stake from there too, which is really cool. And so with that being said, in Ledger, note that certain projects require a minimum. So in order to stake Ethereum, you need 32 Ethereum, which is pretty costly. It's probably $50,000, $48,000 right now. And for Polkadot, you need 250 DOT, which I believe Polkadot's around $5-ish right now, or $4. So that's not as much as Ethereum, but a couple of these projects require a minimum. So just bear that in mind if you're trying to stake through Ledger. And number 4, you could stake through an exchange, whether it's centralized or decentralized. Majority of the top centralized exchanges allow staking. Coinbase, for example, allows it. I believe it's August 2023. I think Binance took away its staking, but I for sure know Coinbase still allows you to stake on their platform. But this is the most dangerous staking option. Obviously, we know NYC, which is an acronym widely known in the crypto space, is not your keys, not your crypto. The majority of what you hold crypto-wise should be cold storage somewhere. If you don't have the money to buy a Trezor or a Ledger, that's completely fine. You can go the free option, aka MetaMask, and already showed you how to do that in a previous video. But please do not hold majority of your coins on a centralized exchange, because there have been exchanges in the past, like Celsius, that completely dropped the ball and people lost millions from that. But even from that, what is nice and why people kind of gravitate towards centralized exchange staking is you don't need 32 Ethereum as a minimum to stake Ethereum. Whatever Ethereum you buy on centralized exchanges, they allow you to stake that too. It's going to be less of a staking reward than the normal staking reward that you can get, but they do allow that. But like I said, I don't recommend you staking from a centralized exchange. Decentralized is a lot better. Still risky though. And so I'm going to go over the first example of staking in the Hedera Hashgraph ecosystem, the first example of staking on an actual blockchain network. And so this is an example of one of my wallets on Hedera. As you can see here in the top, if you go to wallet.hashpack.app, you will bring up the Hedera Hashgraph wallet, which is really cool. And once you link your Ledger, Trezor, whatever you have, wherever your coins are, whenever you link that into this wallet, and you're able to stake, for example. And so as you can see here, what's cool about Hedera is it allows you to stake while having your HBAR in your cold storage wallet. You don't have to lock away your coins like majority of projects do for staking. So I can literally swap in and swap out on my Ledger account for HBAR, and it doesn't affect the staking at all. Well, I might make more, I might make less, depending if I take out or put in. But what's really cool is I'm not locked by that for HBAR specifically. Not all coins are like that. But as you can see in the staking option, a reward history, I've been doing this since May. I've been testing this out. I test things out before I broadcast to the people because I want to make sure that it is safe for everybody else, and so I'd rather be the guinea pig. But I have been grabbing rewards for a good while now, almost 3 to 4 months now, and so everything's been good, and it's really cool. And so next, what I actually wanted to do is show you Avalanche. So in this case, this is how you stake on the Avalanche network. As you can see, the website, you go to wallet.avax.network. And then from here, it's going to be the same deal where you have to plug in your cold storage wallet or link your MetaMask. That way you're able to link to the network in order to stake. And last but not least, I'm not going to go too crazy because going through decentralized applications and seeing all these new things might freak people out. But I want to at least show y'all the potential of what you could be doing in crypto. And so this is a small little HBAR account that I had created a little while back to test this out using decentralized exchanges for staking. And so this is just a different Hashgraph wallet that I have. And so what's cool is it makes it really easy interface. So you go to dApps, And for me, I favor this, but you would scroll down and you would find it in the dexes and bridges. I use Saucer Swap, but I believe Hilo Swap is like the number 2. But Saucer Swap is the biggest dex DApp in Hedera, so I just choose the biggest to use. And so whenever you click it, you pull up the app. So you can literally do everything from your wallet, which is super clean. From here, if you need Sauce, which is the native token of Saucer Swap, you can swap here, HBAR to Sauce. Whatever you're swapping from, that will be your fee. And so in this case, let's say they made some Sauce from staking or collecting liquidity pools, which I'll show soon. Whenever they go from Sauce to HBAR, they will pay a Sauce fee, and then from there, people who are staking Sauce are rewarded because they add that to the pool. And so from here, you can see at the top, there's different tabs. Liquidity is kind of what I was going over, so I'll explain this pretty easily. So in liquidity, you're adding money into a liquidity pool. So think of foreign exchange centers where you go, let's say you are from the US and you're going to Europe and you need to go to a foreign exchange store. That way you can transfer over 1,000 USD into $1,000 worth of euros. Well, the foreign exchange store itself is going to have a liquidity pool of a bunch of euros and a bunch of USD so people can exchange back and forth. And this is the simple version of that, just in crypto digital form. And so if you have a lot of HBAR and a lot of Sauce, then you'll put the equal amount in here in a liquidity pool, and it'll allow you to join a farm. And so in this case, farms allow you to earn an APR, aka APY, but it's just more realistic because it's off of a 5-day average of the trade fees. But basically, anytime people are swapping HBAR to Sauce, Sauce to HBAR, if they are staking HBAR into HBAR-X, they inquire a fee of either HBAR or Sauce. Every time they're doing that, that fee goes to everybody who is contributing to the liquidity pool, aka us, if we are in the HBAR Sauce liquidity pool. For me, I am actually in the HBAR and HBAR-X, aka the staked version, the staked coin of HBAR. So as you can see, as I'm just holding this in the liquidity pool, I have made about 82 Sauce, which is about $1.88. And about 0.36 HBAR, which is only 2 pennies. But as you can see, I don't have much money in here, but it's nice to see my money make money. They're still working on this. You can only stake Sauce, and so I'm doing that with what I have. And so all the Sauce that I make from the farm, all the Sauce that I make here, and so whenever I harvest that, I come in and put into X Sauce. So I'm literally making interest on interest on interest. And so before I get any more in depth in this, I can actually go further in detail later in a video, whether it's short form content on YouTube or just a live about going over this. But either way, if people are interested in staking and things of that like, I'm more than welcome to go over that more. There is always a risk in staking. Price could go down while you're staking, which price is going to go down even when you're investing. You could lose your cryptocurrency if you lose your private keys or your password to this account. And I just want to preface that. I'm going to preface that more in the video next, the final video after this. But please, whenever you potentially invest in cold storage wallets or MetaMask, whatever you do, whenever they give you the recovery phrase, write it down, save it. Do not forget it. You're going to forget the words, but do not forget where you put it. Because in a case of if you ever forget your password or you lose your cold storage wallet, that recovery phrase will save you money. And that is the way you'll be able to get that account back, is through that recovery phrase. And lastly, if you're staking on an exchange, you could be exposed to hacks or other security risk if the exchange goes bust or things of that nature as well. So always know that while you can make rewards, there's always going to be risk too. So with that being said, that concludes the staking video, and I'll see you in the next and final video of the crypto course. Surprise. So congratulations. If you have made it this far, then that means you have completed TTF's official crypto course. But it doesn't stop there. If anything, your journey is just starting if you choose to take this route. Now, I'm not saying you should go and invest right away into anything and everything that you've seen in this course, because that would be reckless. Like I've said in the course, you need to take the time out of your day and weigh out all of your options, form your goals, go over all the projects that could fit said goals, make sure you calculate your sell levels to see if it fits in said goals, and then go from there. I just want to go over some advice if you do decide to come into the cryptoverse, because it can be a very scary and unknown place, and I want you to be prepared. So first thing, never share your private keys or recovery phrase with anyone, and make sure whenever you are prompted the recovery phrase, write it down. Never forget it, just like Artie had said in a couple videos back going over the wallets and security wise. Your recovery phrase will save you in the instance of just losing cold storage wallet if you have one, or just forgetting passwords to MetaMask or cold storage wallets as well. And speaking on that fact, MetaMask and cold storage wallet companies will never ask for your recovery phrase or passwords ever. So that's important to remember. So don't fall for all the scam emails. Next, use two-factor authentication for everything. And I literally mean everything. It's really annoying to always have to sign in to all the brokers that I use with two-factor authentication, 2FA for short. But it's peace of mind knowing that it's that added padding of security that I put all my accounts in, so I can go to sleep knowing that I'm good to go. And while majority of this advice is for people looking to get in, you still need to make a self-evaluation of if personally for you, you have the traits and personalities to even deal with crypto. Because if you don't respond well with seeing a little red, then crypto just may not be for you, and that's okay. Crypto will see violent spikes, especially soon coming up during the halving, ups and downs, especially right now in August. And we could be seeing another one in September and October of 2023. I mean, the time will tell, and people will be able to watch this video back and see if I was right or wrong. Not trying to predict anything, but there's a good probability we might go a little bit lower on Bitcoin. But it's just important that you make sure you realize that you can't deal with this. And if not, that's okay. You can invest in safer things if you want to go that route. Completely fine. You can still use like managing, make sure your monthly statements are all good, that you're actually net positive, and just trim a lot of fat that you don't need to be spending. That way, not only it helps you, you might not even need to invest, but you just take that monthly statement kind of idea and just better yourself financially. And so that's ultimately what we're trying to do as well, is better you financially, not just crypto investing, but just in general. So getting back to crypto though, I use a very common tactic, and this is not financial advice obviously, but I use a common tactic personally for kind of knowing when there are potential good times to buy and sell. And so there's a famous quote, I forgot who it is. I'm not going to try and remember and just name drop somebody that's completely wrong, but in times when the world is fearful, you must be greedy. And when the world is greedy, you must be fearful. It's easy to get caught up in all the news, drama, and negativity that news and drama creates, right? But if you're interested, check this for yourself. And this is not by the quote, by the way. This is me. Like, if you're actually interested in checking this, look back at specific times whenever things like Bitcoin were talked down upon by mainstream financial experts, and also the times when they were adopted, quote unquote, adopted and introduced into mainstream news. You'll notice that majority of the lows are around the times that Bitcoin was getting talked down upon by the big corporations and big players who have a lot of financial pull. And then during mainstream adoption, whenever news outlets are showing you how to buy Bitcoin and what is XRP and what's Ethereum, that's around the time when prices are peaking, when everybody's actually getting into crypto. They're like, oh, what is this thing? That's probably around the potential peak. And this obviously could be different, but history doesn't always repeat, it rhymes. So just kind of remember that. It's the mentality of we need to scare them to get them out of the market. That way we could buy low. And then from there, once we secure positions, we realize, oh, we look back at it now, it's fine. Everybody can get in. That's the ideology that bigger people are playing on everybody, and it's worked throughout the span of human history. So with that being said, create your plan with logic and not emotion. Theorize as to how much you'd like to make this coming bull run, and then calculate to see if that's possible with the amount of capital you're able to invest with in the markets. For example, if you are looking to make 10, 15,000 and you only have $1,000 of capital and you want to put it all on Bitcoin, there's a huge guarantee. It's obviously Bitcoin could blow off top and go crazy, but just looking at past data and what we could theorize on what's to happen in the next bull run, I personally, for me, I don't see Bitcoin having 10 to 15 to 20x. I think 3 to 5 is pretty likely. I don't even know if we'll reach 100,000, but that's for another video for another day. But it's just the fact to be realistic with what you see in the markets. You want to be in the safest asset, but you want to make a lot more money than the safe asset could probably give you. So it's like, you need to be realistic. This is the first step before anything else. It will determine how safe and aggressive you will want or need to be. And so as I wrap up here, and this is just building off of what I just said, this is the final thing that I want to mention, is that with that specific dollar amount in mind that you want to make the next bull run and what's capable of happening, write down, and I literally mean like write down, whether you type it out somewhere and you just save it for future reference, but what you could do with that money. And whether it's to pay off debt, whether it's paying off your mortgage, maybe you want to buy a new house or car, maybe you want a new vacation home, etc. Whenever you link something tangible with a money value goal, it makes exiting the markets much easier because you know what you want to do with that money. And this is something that people overlook, because a lot of times people will say, well, I want to make 10x on Cardano or something like that, which obviously could easily happen. Who knows? Only time will tell. I want to 10x my money with that. And once it gets to 10x, they never thought what they wanted to do with that 10x profits. And so now they fall victim to the greedy, euphoric phase of, well, I mean, now that it's 10 times profits, it could definitely reach 20 times. And then maybe it does, maybe it does. And then it's made 20 times, why not 30 or 40 times? So, which a coin could do, but where does the thought process stop? Later down the road, you might be exiting at 4 or 5 times profits, realizing that price wasn't going to continue up, maybe even go break even. Maybe you still hold on to the fact that, well, it's going to have to come back to that point and you're holding it for another 2 or 3 years waiting for the next bull run, and you're just annoyed with life and you think crypto is the worst thing ever. It's not crypto. It's you. You never developed a system where it's like, I want to be able to potentially make this amount of money with this amount of capital. Realistically, this can happen. Once this happens, I exit. I have all my sell levels for all the specific coins. I have all the alerts. Like, you make this robotic and mechanical as you possibly can, because that way you're not falling into the euphoric phase. Everything's going up. Bitcoin's going to 1 million. That's where people fall victim to. And so I just wanted to bring that up and make it apparent, like, that is something that happens and will happen to a lot of people in the market coming. And I'm not looking to be one of them. And I hope you, knowing this now, you are now armed with the knowledge that you won't be one of these people too. With that being said, I wish you the best of luck in your journey, whether you decide to even do crypto in the first place, whether you just figure out your money balance and realize that you're running a negative and now you're a positive and now you're living in just a better life in general, or maybe you go into ETFs or stocks, whatever you decide to do. I hope that you find joy and abundance in it. And as always, if you have any questions, feel free to reach out in the TTF Discord or reach out to me. And from there, obviously, I'm probably going to be developing more on the side for the crypto course, probably small mini series or live streams or certain topics that people want me to explore even more. And from there, I'll see you then. Peace.